let's take a peek at the legendary investor, Mr. Warren Buffett. He's the epitome of long-term investment success. With his wise strategies and patient approach, he's become one of the wealthiest individuals globally. Learning from his experiences can inspire and guide you on your investment journey. Let's start with Mr. Buffett's mentor, Benjamin Graham. Once upon a time, in the roaring 1920s, a young financial wizard named Ben Graham emerged on the scene with a revolutionary approach to investing. In a time of risky market conditions and economic uncertainty, he had an uncanny knack for spotting undervalued stocks with minimal risk. But it wasn't just his impressive investment acumen that set him apart. It was his ability to convince companies to make strategic decisions that would lead to handsome profits. One such successful call was his involvement with the Northern Pipeline. Through his persuasive charm, Graham convinced the management to retain their bond holdings, a move that proved to be highly profitable. This early triumph would set the stage for an illustrious career in the world of finance. At the age of 40, Graham shared his vast knowledge with the world by publishing the groundbreaking Security Analysis. This influential work became a cornerstone in the stock market and introduced the concept of intrinsic business value, forever changing the way investors assessed companies. But Graham's greatest impact was yet to come. Enter Warren Buffett, the man who would eventually become one of the most legendary investors in history. Buffett's journey into the world of finance began in 1951 when he observed his mentor, the chairman of a small insurance company called Geico Insurance. Intrigued by the insurance business, he traveled to meet with Geico's vice president, Lorimer Davidson. This encounter would mark the beginning of a lifelong friendship and shape Buffett's future in finance. Initially drawn to the allure of Wall Street, Buffett decided to heed the advice of his father and his role model, Ben Graham. He returned to his hometown of Omaha, where he worked as a stockbroker and honed his public speaking skills through a Dale Carnegie course. Soon, he found himself teaching an Investment Principles and Rules night class at the University of Nebraska. In 1954, fate smiled upon him, and he landed a dream job at Benjamin Graham's partnership. With the closing of Graham's partnership in 1956, Buffett found himself with savings of over $174,000, a significant sum at the time. With this capital, he embarked on a new adventure by founding the Buffett Partnership Limited in Omaha, an investment partnership that would become the platform for his remarkable career. Over the years, Buffett's partnerships flourished, and he made savvy investments in various companies. Notably, in 1962, he achieved millionaire status with a surplus of over $7 million. Consolidating all his partnerships, he acquired a textile fabrication business known as Berkshire Hathaway. This seemingly innocuous purchase would turn into one of the most pivotal decisions of his life. As Buffett took the reins at Berkshire Hathaway, he appointed a new president to oversee its operations. In 1966, he closed the partnership to new investors, setting the stage for a new chapter in his investing journey. In 1967, Berkshire Hathaway issued its first dividend, signaling the beginning of a transformation for the company. In 1969, Buffett made a momentous decision by dissolving the partnership and distributing assets, including shares of Berkshire Hathaway, to his partners. This move paved the way for his annual letters to shareholders, which would become eagerly anticipated missives filled with valuable insights and wisdom. In his early days, Buffett relied on a modest salary of $50,000 per year and external investment revenue. But it was in 1979 that the world took notice when Berkshire's stock price surged from $775 to $1,310, catapulting Buffett's income to a jaw-dropping $620 million and landing him on the coveted Forbes 400 list for the first time. In a true rags-to-riches tale, Warren Buffett had officially arrived on the global stage. As his wealth grew, Buffett knew he had a responsibility to give back. In 2006, he announced his ambitious plan to donate a staggering 85% of his Berkshire shares to 5 foundations through annual gifts, with a significant portion destined for the Bill and Melinda Gates Foundation. His philanthropic endeavors showcased not just his financial acumen but also his compassion for humanity. While Buffett's financial prowess was undeniable, he was also a wise visionary when it came to securing the future of his investment empire. In 2007, he disclosed his quest for a younger successor to manage his business. Though he considered the capable Lou Simpson, the age difference proved a hurdle. But this move underscored Buffett's commitment to continuity and ensuring that his legacy would thrive beyond his own tenure. Buffett's journey to the top was not without its share of challenges. In 2008, he temporarily surpassed Bill Gates as the world's world's richest man, boasting a staggering net worth of $62 billion, according to Forbes. However, the 2008-2009 economic downturn had its say, causing a decline in their fortunes to $40 billion and $37 billion, respectively. Despite this, Buffett's determination remained unshaken. Buffett's investment prowess was honed over the years through a series of calculated and strategic moves. In the early 1970s, Berkshire began acquiring stock in the Washington Post Company, forging a close relationship between Buffett and Katharine Graham, a company executive. Although the SEC investigated Berkshire's acquisition of Wesco in 1974, no wrongdoing was found, bolstering Buffett's reputation as an ethical investor. In the late 1970s, Berkshire set its sights on ABC, leading to a merger deal with Capital Cities worth a staggering $3.5 billion. Buffett financed the deal in exchange for a 25% stake in the newly merged Capital Cities ABC. Despite some regulatory hurdles, the investment proved to be another feather in Buffett's cap. Buffett's investment prowess was further tested when he acquired a 12% stake in Salomon Incorporated in 1987, eventually becoming its director. A crisis involving rogue trader Paul Moser led Buffett to take the reins as CEO, a move that demonstrated his hands-on approach and commitment to safeguarding his investments. One of Buffett's most famous and profitable investments was in the Coca-Cola Company in 1988, where he owned 7% of the company for $1.02 billion. This savvy move would pay off handsomely over the years, showcasing Buffett's ability to identify and capitalize on lucrative opportunities. Buffett's journey was not without its share of bumps in the road. In 1998, he made a rare move by acquiring General Re for stock, and later, he became entangled with AIG through General Re's reinsurance dealings with Maurice R. Greenberg. Despite these challenges, Buffett's strategic thinking and resilience helped him navigate the stormy waters. In 2009, Buffett displayed his unwavering confidence in the global economy by investing $2.6 billion in Swiss Re's equity capital raising. This move further solidified his position as a fearless investor and a risk-taker who believed in the long-term potential of his investments. Today, Warren Buffett stands as a testament to the power of research-based value investing. From his humble beginnings to becoming the sixth richest man in the world, his journey is a source of inspiration for aspiring investors everywhere. For those looking to follow in his footsteps and go into investments, Buffett's success offers invaluable lessons. Do your research, plan your finances, understand liquidity restrictions and tax implications, assess your risk preference, and seek expert advice when needed. Now, we want to hear from you. What investment strategies resonate with you the most? Are there any specific topics you'd like us to explore further? Drop your thoughts in the comments section below. Take the next step towards securing your financial future by subscribing to our channel and hitting the bell icon for regular updates on wealth building tips and investment guidance. Happy investing!